Good evening, this is Ken at Tortoise Capital with a review of the weekend trading reports for July 27th, 2018. Market is in bullish, quiet conditions. On an annual basis, using NDX 260, we are overbought. Short-term look-back period using NDX 10, we are in the middle of neutral at 51 out of 100. Looking at the market mosaic, price with respect to the 200-day moving average is yellow bullish at 4.50%. The slope of the 50-day moving average is red neutral. ADX is a non-trending 16.7. The risk index is the 30-period moving average of the VIX divided by the 10-period. 1.0 is the boundary between risk on and risk off. We are at 1.038 into risk on. We take that score and look at the last 5,000 trading days and compute the risk C by finding the average and the standard deviation, and that computes the Z-score, which is at 0.99. That means we're almost one standard deviation favorable compared to the long-term average. That puts us well into the summer. As you see on this 90-day histogram, we move from minus 1.5 to positive 1 and holding stable. This is still favorable for the long side. If this were to roll over, we would start looking at fall conditions and try to preserve gains made during this swing period, similar to the move that we've seen here and then in here. But for right now, it's still long and strong. Blended monthly balancing, you can see the holdings for July. Those are still doing well. Next reevaluation will be next week on or about 1 August. These are the leaders of performance on the various ETF portfolios that we track. ETF2, the current theoretical market exposure is at 40%. Just a quick look at some BMR blended monthly rebalancing portfolios. You can see that the technology has been a key leader over 3 and 6 months, doing well in 1 month, but this week was among the percent losers along with small caps and mid caps. Latin America and emerging markets have maintained their little bounce here, had a pretty good weeks. In ETF 32, you see that Brazil also had a really nice week, so part of that reaction against the overreaction, if you will, while the key leaders were taken out and shot this week. So this was kind of a reversal week for all that. But about half the market on buy signals, half on cash, with the U.S. still dominating long term. Dow 30, 3M and Travelers and Caterpillar were the key leaders this week. The longer term leaders all gave up or either gave up some gains or were underperforming as the market kind of was retracing, if you will. Under the sector spiders, again, it was the weaker symbols had better weeks, while the key leaders all were giving up profits. ETF Max looks at the top 40 or so of a 500 ETF portfolio. Again, mostly the leadership mostly underperformed this entire week. In the market health check, the vertical blue lines are 10, 20, 30, 40, 50 days of look back. The purple lines, horizontal, are price targets that were once resistance. The red lines are support levels that were once resistance as well and have been holding. So the market, after a nice dragon re-entry here, has been enjoying almost 15 days of gains. Price, the 10 and the 30 regression line have all left the river. You see the 10 and the 30 regression lines sloping up. MACD histogram has come from below the zero line to cross the zero line, now out of the river. It's still looking favorable. All-time high around 287 still is within reach. ETF2 regional report. The 4 U.S. sectors are all above their 4-month average, so they are on a buy signal. That's why we're still at 40.60. The S&P at 69 is better than EFA at 44, so it's still the U.S. over the globals. Inside the U.S., it's technology, then small caps, then large caps, and mid caps. 2 weakest sectors remain Latin America and emerging markets. In the market health check, all small caps and mostly growth for the U.S. are good. Asia, a mixed bag. Europe, uniformly bad. ETF 2 lens. You can see our interpretation table down here for how we approach these opportunities. I'll let you read that. The ETF liquidity, this is basically just finding the 30 most liquid symbols based on average daily dollar volume in the last 30 days and their relative volatilities for trading. Shifting to the daily report, still bullish, quiet. We have channeling signals in technology, small caps and mid caps. Overreaction in Latin America to the downside. I would wait to see weakness there before I jumped on that one. The Max Payne, the usual candidates. Inside the Dow Tactical 30, lots of fraud quality numbers better than 3. A couple RSI 2 values below 5, so that looks promising. A number of shorts potentially setting up, and only 2 targets for the auto framer, GE and Intel. ETF 30, much the same, just a couple targets, treasuries and gold for the auto framer, a handful of dojis and channeling. Key leaders down here lately, Latin America and Brazil, have now been outperforming on 1 day, 10 days, and 1 month, but then significantly underperforming longer term. And then the key long-term leaders are now suffering shorter term, so maybe some market reversals. Daily pinch and stretch, the first column, the most positive Z stretch, these are the ones with the greatest excursion north of their Bollinger Band mean. Negative Z stretch, the largest proportional move below their Bollinger Band mean, Intel and gold. Most expanded pinch box, these are the symbols that have had exceptional 30-day directional moves. That's why the river is so wide, and that means that Mexico is, the width of that river is 2 standard deviations wide, so quite an extraordinary move at this rebound. No super pinches to speak of, although XME is pinched. Auto framer with the usual target array, regression line fractal framework. Top shelf in green are the ones that are the most ATRs below their own long-term fair value, so these are deep discount value plays. And then the bottom shelf in the red, the ones most overheated, and the number of ATRs beyond their long-term fair value. You can see that quite a significant bounce here in Mexico. Daily squeezes are those symbols that have had wide average daily ranges, but which were compressed quite sharply the previous day, and there's potential doji or breakout trades developing there. MACD spring screener, these are those symbols where the MACD histogram line is below the 0 line, so there's a negative bias, but that price action has reversed, and it has crossed its own 5-period moving average. So these are postured for some early success on reversals, and then this MACD-Z score tells you how far away from its own Bollinger Band mean on the MACD that it is. These are some trades that we'll be framing at the weekend workshop this week in Leavenworth. Last thing to look at, the z-scores of the regression lines slopes. You can see the 90 in red has made a nice recovery move from below this yellow river all the way to the top and is starting to break out again. Long-term goodness. The 30 has reached a +1 sigma, and the 10, which had a nice run up in the last 5 places where it failed again, but now it's starting to get some reversals well above the 0 line, and that would be a very favorable condition indeed. Market finding support along the North Shore, and soon to break an all-time high with just a little bit of help. We'll just flash through these for you. And that's everything I want to cover this weekend. Keep your risk measured and your powder dry.